What's up, everybody? We're back again with another lesson here today, and I hope everybody is having a good weekend so far. And today's video, really, I just want to kind of talk about spotting liquidity, how how you can make it easier for yourself um, to find where money is sitting. Okay, so how to spot liquidity. Okay, so basic we're going to keep it basic here today, sort of, but the main sources of liquidity would be retail patterns, um, and any type of equal highs or equal lows, right? So like double tops and double bottoms, and uh, you know trend line bounces and all of that, right? So, but the most basic one would be equal highs, right? And equal lows. So on this first example right here, we have AUDUSD, and you know uh, a past move that we actually caught. If we go to the daily time frame here, we in this area in general right here was this past move that we caught. But if you take a if you take a second to look at it, you can see that this candle right here shot to the upside, and then all of a sudden, price had changed directions um, in a faster pace. Okay, so you can identify these candles as such as maybe you can call these candles a liquidity grab candle, a trap candle, for if you think about it, uh, breakout traders say that there's breakout traders that buy or sell on breakouts of structure, right? So say this candle shot up, and people that do trade this way, let's just say that they started, you know, putting their buy positions in the market right here. Okay, so they were expecting to buy right here, and maybe they had their stop loss below this low or this low, who knows. But maybe they were expecting to buy this breakout here, and you can see instantly that price had traded the opposite direction. Okay, so into more details here, we can see if we go down to the 4 hour, right, we can see where this candle had taken liquidity, right? So there's equal highs right here, right? So this is where maybe the mass of retail could have been selling on this second leg of this M, right? This double top. But what happened was we had this candle shoot to the upside and grab liquidity before moving to the downside. Okay, so we can use that area as a point of interest for potential trade ideas, potential trade setups. So off of this candle that we see, let me delete this. You see this one daily candle that shot up above liquidity and moved down. If I place, a point of interest, this is if this is my point of interest at institutional 70080, right? And if price just plays out, we can see clearly we got a trade back up into this area and then traded down for 300 plus pips. Okay, so you know spotting liquidity in a sense isn't too hard to find. um, it's more about letting the market tell you which story it wants to play, because uh, you guys got to understand that the market is fractal. So an objective for banks, institutions, prop firms, hedge funds, um, all of that is to sell at a higher point than you and buy at a lower point than everyone else, right? So they want to sell higher and buy lower than everybody else. Okay, so here we have an example on USD ZAR, a beautiful area of where we can find liquidity, right? So you see this, as they would say, pretty strong support, right? For us, we see money, but for retail or conventional, conventional trading technicals, right? The masses would be buying this, expecting it to go up, right? They have that third touch of the support, and in reality, price fell on them and cleared all of these stop losses that maybe would have been sitting here. And you can see clearly that we can play off this this candle down here before this long up move. You see this candle down here and then this long up move, right? This move right here in particular looks like a lot of money got behind this move. Whereas, in this area, this area for say, it just kind of looks choppy-ish. So there wasn't a lot of orders or positions, you could say, um, to move price at such a fast pace, right? But you can see clearly down here, it was only 1, 2, 3, 4, 5 days, and then price got out of that area after such a short amount of time. Okay, so imagine there's 95% of people that are buying in this area, and imagine if you controlled the market, right? Imagine if you controlled the market and your objective was to make money off of other people's money. Let's just put it in that perspective, okay? So if you knew somebody was buying here and wanted price to maybe, go above these highs or and whatnot, you as a bank or an institution or just a big money player would put so much money in a sell position to knock all these traders out, so then you can buy, so you can buy price up freely, if that makes sense. Okay? So once again, strong support, strong resistance levels are very good indications of not only liquidity, but what everyone else might be doing, right? So think think outside the box. Think, how can I go in line with the manipulation, so I don't become, one of the 95% of traders that lose 95% of their account within 95 days. You know what I mean? So beautiful liquidity grab to the downside just to buy up on USD ZAR. Okay, so here we have oil, right? We have an example on oil. Now, there's a couple of examples in here that I would like to talk about. We'll start with the obvious one all the way to the left, okay? So you remember how I was saying, double tops, double bottoms. Um, you could say, uh, you know, triple tops, head and shoulders, inverse head and shoulders, right? All these retail patterns are, they can get you caught up. They can get you caught up in some losses. And so right here we have this famous pattern that retail loves to sell from. Okay, so I know you guys see this head and shoulders here. Okay, so imagine if 95% of people are selling right here. Maybe they put their stop loss above this high, who knows? And take profit might be below this low. And you can see if they moved it up a little, then yeah, their take profit would have gotten hit. But if they expect this to go any lower, then price would have came back on them. And you know this candle right here, as I said in the beginning, you can call this, you can identify this candle right here as maybe a liquidity grab, or a trap candle. And the reason why I say trap candle is because we have structure here, structure here, and the breakout traders might be buying this candle up, right? They're buying, expecting this to go higher. And what happens in return is they take all the stops, they hit all the stop losses, and continue price to the downside. Okay, so that's one example. Another example in this, and also for the entry point on this, which is crazy. So if you look at this head and shoulders pattern, right? Imagine if people are putting their stop losses up here, right? This candle shoots up. Now, if we look in this area of this last drop, not this one, because you can see price traded up to this area and then traded down, but price hasn't got up to this area yet. So if I had this as a point of interest, I would be able to sell. Now, remember, as I said, banks, institutions, prop firms, hedge funds, big money players, all of them, they want to sell higher than you. and they want to buy lower than you. So if you, if 95% of people were if 95% oh excuse me if 95% of people were selling here and you trade in line with big money players here, you have such an advantage, right? Sell higher, buy lower than everyone else. Okay? This is important. This is something that really needs to be understood um, in your trading, because if you don't understand this, I mean, you can get caught up in areas and selling in areas right here, right here, right here, right on all of this, you know, resistance, right? And usually support and resistance traders get knocked out because of simple moves like this, if that makes any sense. But yeah, we see that when this candle shot up, new liquidity was formed. New liquidity had been made. So now imagine the banks sold here, but then also imagine if retail had also caught this double top. You see how there's a right an M. So imagine if they placed their stop losses above this high here to the left. So entry was here, their stop loss is here. Now watch what happens next. So above this, we identify liquidity. Now we can identify this candle as, you know, it's a whole different candle, because if you look at all these candles in this sequence compared to this candle right here, the that last, you know, that last shot up right above that liquidity, that last just push to the upside, you can identify that as a liquidity grab, a trap candle. um right? So playing off of this, we see this area right here had been accounted for. But if we look a little higher, we notice that this area in particular, had only stuck around at this high for, you know, 1 2, you know, 2 days is good enough, and then shot down, right? It fell off a cliff here. So if I use this area right here at 65.60, if I use this area as a point of interest, there might be a optimal trade idea. So as we're seeing this, you know, we see the liquidity, we spot it, and our objective, our objective is to trade in line with big money players. We want to sell higher and buy lower than everyone else. So here we can see, right, equal highs. If we want to sell, if we want to sell at a higher advantage point, we would be looking in this area here. So as price moves forward, you can see clearly that this went right to the T, tapped the entry right to the T, and fell. Right now, why did this fall at such an aggressive pace? Remember, big money players want to sell higher and buy lower than everyone else. So there was a clear resistance right here. And now there's clear support right here. Okay? There's clear support. And maybe we can see a play on oil just a little titch lower than where everyone else was buying at right here. Imagine if people were buying here, right? You see how long it took price to get to this high, but then how short amount of time it took for price to trade back down, right? That is money being built up just to distribute it off, just to distribute the orders off, right? Okay, so here we have another example on gold, and this will be our last example. Um, very clear, very clear. You can see all of this support here, all of this support, right? So, imagine, one touch, two touch, here, all of this here, right? Excuse me. Imagine if there's people that are buying this area, right? So imagine people have orders they want to buy, but you see right here, this lower point of liquidity, you see price just barely dip below that area, and then trade up. Why did it do that, right? Well, imagine if, people were buying here, buying here, buying here, buying here, buying here, right? And imagine if their stop losses were set, under this low. If they were buying on these two right sides right here, imagine if they put their stop loss under this point of liquidity right here. Now, I bet you if I go to the higher time frame, we can find out why price decided to reject on this area. So if I go to the daily time frame here, I can see that clearly this candle right here. Let me zoom in so we can explain it. So when this candle shot up, right? One, there was an efficiency in price. Okay, you can see right here that only buyers were offered in the market, and at the same time, there was this break of structure. So as price, um, you know, starts to mold itself, form itself, we can start to see this strong support. And as I preach, the banks, the big money players, they want to buy lower than everyone else and sell higher than everyone else. Okay? So once again, if we imagine everybody, 90% of people are buying at these levels here, what's most likely to happen? The banks, big money players, will drive positions lower so then they can move price in the intended direction that 90% of people which had already thought that it was going to go in that direction, right? So sometimes it's not even the fact of these people being wrong about their directional bias, right? It's not even the fact that they're wrong about that. It's just where they decide to get in the market is what is causing the problem for them. Okay? So I hope I hope this video was helpful on giving you some insight on how to spot liquidity, and you know giving you a better idea of when and where to get in the market, and when and where not to get in the market, right? If that makes sense. But yeah, you know, it's not a hard concept to follow. It just takes practice, right? It just takes practice training your eyes, and then learning how to execute off of these plays, right? So yeah, I hope everyone had, you know, something that they learned in this video, and go give us a follow on Instagram at Outcome Reach. We'd love to get messages from you guys, and we love giving you guys feedback. And you guys might think that we're helping everyone get better at trading, but also in reality, you know you guys help us a lot too. So yeah, I love you all. Have a good weekend, and I'll catch you guys in the next lesson. Peace out.